mortgage on getting close to putting together a site for you to be able to go to or at least follow us. Andrew, tell folks where they can follow you at, my man.
So you can find me on Instagram. I think it's Andrew_CCM. You got me on Facebook, LinkedIn, YouTube. You just Google my name. You can find me. I'm everywhere.
Well, I just want to compliment you, man. I think the TikToks that you've been doing and the Instagram posts have been very informative. I think they've been very just good at getting basic information out there, right? And I think now more than ever, that's as important as anything. But just kudos there, man. And so, look, follow, any of the folks who are logging in and Mortgage Gumbo, you know where to get me. But go follow this guy. This is a plethora of knowledge. This is one of the top loan officers, like myself, in the entire nation. And so puts out some great content, very informative, very easy to watch, too. I think me and you, Andrew, get along because we keep it real. We only know how to just kind of call. It might not be textbook, so to speak, right? They might not be like, here's exactly how you do a podcast. But
it's right to the point. There's no fluff.
Let's get the information out there, right? So a lot happened last week. You were out ill, very ill, because you're usually a guy that plays hurt. But man, you talk about things changing. PPI came out, CPI came out, and it was not our friend, so to speak. So let's go.
I'm never going to take off a week because shit hit the fan, right?
It really did. And so let me ask you this. Let's go with a word, just inflation.
Yeah.
Right? For our inflation. Because we hear it. They're scaring the crap out of us with that word. But let's we've been telling people for months, don't get too caught up on these rate cuts, right? But inflation, what does that mean to you? What is you're in the super headquarters for the third largest lender. I mean, inflation, what is that to you?
Things costing more, right? I mean, how else can you say it?
Yeah.
The price of not just goods, but pay. Everything increased. Right?
To me, Andrew, isn't it like, I don't care what you're saying it is. To me, inflation has become a feeling, almost like touch, right? Like, to me, I feel inflation. I don't care what data says, and that's what we talk about. But to me, inflation has become more of a feeling in the last 2 months than it has over the long haul. And I don't know, we know they make up all this data and all that stuff, but for me, that's where this inflation stuff, and my concern, Andrew, when you start looking at data, and this is again why buying a home right now is still a gigantic win, is you now have, I don't know how builder sentiment can be at 6-month highs and they're super excited, yet they've stopped building. Stopped.
Yeah.
Right? So if they've stopped building, to me, that looks like a house don't just show up. You don't deliver it on a truck and it's good tomorrow. So for that to mean they've stopped building, that means they're not getting permits. So that means new home sales, which kind of helped us last year. That kind of was a driving force. It was a lot more than what we thought.
A big part. Yeah, big part of it.
If that slows down, well, if we know that stopped now, man, that's 3, 4, 5 months out. What is housing data when it's 40% of the PPI report? What is that going to look like? Is that going to make where we do rate cuts?
Data scares me because you and I can look at it differently and use it to our whatever point we want, right?
Yeah.
So I don't know.
To me, that's kind of what headlines are, right?
Yeah,
headlines are the misleading or the clickbait, right?
I think regardless, we'll start to see some type of a cut down the road.
Sure.
I think Q3, and I think it's just going to be from and I think I said this like 2 weeks ago, but eventually the government they need to do a rate cut because they owe so much money and the debt is crippling them. So eventually they're going to have to slow it down. So is it going to be like self-serving, right? Or are people just going to stop spending? I don't think they will. I don't think anybody cares right now. They're just, you want it, you're getting it, and you're just going to worry about it later. And
you just hit on something that got me thinking, and I think with the government, more than what Dwayne Stein and Andrew Makovic think, or folks listening, what the government really has to worry about is your regional banks.
Yeah.
Because small businesses are struggling. They're going out. When you've got Google, Nike laying off, Google, UP, all these folks laying off. And then, so imagine small businesses. These are the best of the best. So your local small businesses can't hire and they're going out of business. Well, guess where they get their money from? Regional banks. How many lenders, really, for us and for you, I mean, we destroy. I tell people all the time, go see your little local bank and then come back to me, and our rates are 0.5% cheaper because they got to pay brick and mortar. We don't get paid until we close that client's loan. They got to pay somebody to say hi at the front desk and all that. So I think the Fed, the problem also, number one, they've got all this interest coming due, which is a lot higher than what it was when they took it on. Yep. And then these regional banks, man, they can't lend out right now because, Andrew, if you and I want to build a mortgage DNA widget, not only can we not afford to get it from the bank, we can't get the money to advertise it or anything like that. So it's leaving these regional banks in trouble. And I think,
well, they don't even want to refi. I mean,
no.
What was the thing? It was like they used to consider about 33% watershed. Like every year they would have this, these many people would be refinancing, right? Money would be coming off. What was the stat you were telling me before we went on air? Is it a 20-year high?
On the people staying in their home?
People staying in their home.
Yeah, so yes, people are staying in twice as long. The median time that folks are now staying in their home is 12 years. Twice as long as they did.
Twice as long as before.
Yeah.
So, and all the people that refinanced, 2 years ago, they're not refinancing again, or if they bought, they're not going to sell for a while.
So if they just hang on, they're no good. They're no good to the market till 2030.
But they're the ones that's that anchor that's bringing down more business for super regional banks and regional banks to lend on. So, y'all, that's why when people ask, like, what's the difference between you, cross country, a lender, and a bank, that's one of them. We have a large warehouse line, and we are not afraid to lend. And we're not going to have these crazy overlays because we're not afraid to lend, and we have the capacity to lend.
Well, and I think that's the biggest thing. Having want and ability is two different things. Yeah. And we have the ability to and to be competitive, even in a rate environment right now. Look, rates went back up above while you get sick, and then rates go back above 7%. Right? I mean, so, and we've talked about it's ebb and flows, right? It's not going to be some gigantic roller coaster. So, now what's going to happen with that? And I think when you've got people staying in their homes longer, right? You've got folks that are, when you look at it, single family homes being built for rent and multifamily homes being built for rent. Yeah. And that stuff has doubled over the years. So, Andrew, people aren't building for them to live in it.
Nope.
They're building it to rent. And everybody out there can't be goofy and making bad business decisions. So they got to know that they're going to get those rents. Right?
Well, think about it, though. If you're a builder and you can build a 4-unit, right, 3-unit, it's cheaper than building single-family homes. So, and if they can all be rented out and maybe even get subsidies for it, why wouldn't you?
Yeah.
Like, I would if I could. Makes sense.
Yeah. I mean, and at the end of the day, inventory, I got a stat here that I wrote down. Inventory is down 40% from pre-pandemic. 40% inventory. That means there's almost half the amount of houses there was then.
Yeah. Going back, what, just since 19.
Yeah, that's 19 is what they say. So I mean, so 26% of sales went for above asking, right? So I mean, dude, 1 out of every 4 houses that hits the market, somebody's paying more. And I don't know about in your market, but I've seen it here in the Gulf South region. I've got a couple buyers. I've got one right now. The appraisal came in; they're paying 20,000 over what it appraised for.
I think we're going to get back. This summer, I think you're going to see contingencies coming back. Well, or I should say off. I think you're going to have more appraisal gaps.
Yeah.
You're going to have people paying for sellers' closing costs. I think it's just going to be one of those people. There's not a lot of inventory. People are sick of living where they're living, or sick of renting, or just can't rent anymore. So the other thing is that people's 401ks are starting to come back too. So I think they're going to eventually tap into that to go and, okay, this is the summer I buy a house, right? Yeah. Or spring, I'm going to buy a home. I don't even know if there's any more buying seasons, but they're going to buy.
Yeah.
But
no,
it's whatever it's going to take. It's going to take. People are going to buy a home, and you should have the ability to buy a home, right? I mean,
yeah. I mean, and I think that's important part of one of the things we talk about all the time that we advise our client. Like, let's keep it real right now. Me and you don't come on here and try to persuade somebody to do something, right?
No.
Like, hey, at the end of the day, you and I are good at what we do. We're going to book loans. We're going to outwork whoever we need to do. So that's fine. We're trusted. People like us.
Yeah.
But I think what the most important thing that I think people need to understand is now's not the time. That debt is increasing. The average monthly debt is nearly $1,600 outside of what you're paying on a mortgage, right? So autos, when you're looking at, all those type of things, I mean, man, that is a lot of debt that's adding up. So my message is, all right, maybe you're not ready right now. Maybe you're like, Dwayne, Andrew, shut up. I'm not buying right now. The rates are in the, mid to upper sevens. I want to wait, even though you're going to pay more.
Right.
Yeah. Just be careful with that credit.
That's it.
Right. Don't let that, because one screw up, man, one bad bit of advice, one bad thing, could really put you in the hole. And then if you are a homeowner, be careful wearing that 3% like a badge of honor, and then you go miss that credit card payment, right? Or you miss that auto payment, and then your credit drops, 100 points.
Snowball.
And then we've got super issues, right?
Yeah. So I guess what you're saying is, look, maybe you don't want to buy a house now. Maybe it'll be in 12, 18 months. But be mindful between now and then how your spending habits are going to be. Be mindful of all that. And that's what I always tell. If you're not ready to buy a home right now, that's okay. Let's do a soft inquiry, see where your credits are at. Right? Again, we talk about it. We'll do it for free. We'll do a what if scenario, help build your credit up, tell you the right things to do. Maybe it's getting put on as an authorized user. Maybe it's hey, this can be deleted. If you pay this off, ask for a deletion letter. Be mindful of that. And if you are starting to struggle, then this is when you should call now, not when you get behind in your credit cards to do a refinance. You got to do it before you slip up.
Yeah. No, and I had an unfortunate conversation with somebody yesterday that listens to the show. They live in Texas, and so they called me, and they're now 90 days past due.
On the mortgage.
On the mortgage. And I'm like, I need your help. I listened to your show. I'm like, man, we're handcuffed.
Yeah.
Right? So tried to see, hey, is there, then they don't have any equity to do a reverse, or no other options now at 90%. There's just, at 90 days past due. So he's like, well, what do I do? I said, you call your current mortgage holder, beg, plead, do whatever you can to try to make things right.
Right.
And then you've got a couple-year process of trying to get back on that horse. Because life does happen. We understand that.
Sure.
But It will not. The days of it's just going to go away, that doesn't happen
No.
anymore. That does not happen. And
But I
never be
do
any
feel though,
surprise.
like, from a mortgage perspective, I do feel like the companies are willing to work with you though.
Absolutely.
If you need the help, you got to do it right away and be truthful and honest with them. And hey, this is the deal. Maybe they'll do a modification or something, but we're not in it to take your home. I mean, not we, but the
Yeah.
mortgage companies.
Yeah. Well, I think, Andrew, look, we're in a business of booking loans, not taking homes. And I know that sounds
Yeah.
horribly cliche-ish, right? But at the end of the day, the other thing the mortgage companies too is why they're willing to work, they know there's equity there.
Sure.
Right. So, they don't want to be the big bad guy and come in and pull you out of your house. So if you're talking to them, they know there's some equity there. So it's not like it was 10, 15 years ago where the
No.
second you go bad, there's no equity or the market's going a different way.
Yeah. You have a lot more options now.
You've got more options,
Yeah.
right? And that bank's not necessarily wanting to take that from you. Have to go remarket, get you out of the house. Hope you don't destroy the house while in the meantime.
Right.
Now go pay attorneys, do all that. Call them. They know you've got equity. They're probably willing to go, hey, let's fix this.
Yep.
And make things right.
Yeah. All right. So we started the show. Inflation's hot. Got to stop spending money, everybody. Let's buckle. Let's pull the reins back a little bit. Maybe take some lunches with you instead of going out to eat. I don't know. I mean, it's some simple things, but
yeah,
I think people need to prepare a little bit because it could get ugly. I hope it doesn't. I hope that we have a soft landing. I think that the landing is going to be a lot longer and bumpier before it happens. But I definitely think that the Feds can navigate that, but it's not going to be to anybody's hopes and wants of having it sooner than later. I think it's going to take a lot longer.
Well, and even as much as we talk about what the Fed and Powell, the federal funds rate, when they say cutting rates has nothing to do with mortgages follow inflation.
Yep.
And until that happens, and that's why even without the Fed cutting rates, maybe we'll see mortgage rates come down. We've talked about the gap there.
Yeah.
But at some point, there's going to have to be some sort of data and delinquencies and all those things and gas prices. That's hard to do. And cutting checks, sending them to other countries and the stuff going on at the border and all that money being spent, that affects us.
Sure.
It's underlying, but it's bubbling. And I kind of told somebody the other day, it's like the movie Ghostbusters, man. That river's mad underneath, and it's bubbling. And every now and then
you're talking about Ghostbusters Part 2. I remember this slide.
Yeah, remember?
Yeah.
It's bubbling under the streets, man. And so we've got to hope that this stuff just doesn't happen. So my big thing as we look at data, what I'd like to tell our audience is, look, keep an eye on that debt, right? And we get it because what's not happening anymore is, hey, I'll just take that Visa bill and I'll move that over to my Discover at 0%.
Oh, the credit card roulette.
Right? The pyramid, right? Like, hey, all right, this month I'll use MasterCard to pay off American Express.
Sure.
There's no way to hide it anymore.
No.
Right? When the average net rate's now 23%. So, look, keep tabs on yourself. Be real. Reach out to Andrew or I. We've got budget calculators we can send you to look at, have a conversation, see if there's something there. But let's just not turn a blind eye. Hey, we're in it together. You got it, me and Andrew. That's pretty solid. We'll do the hard work for you, right? So just jump on the boat, follow us, let us help you navigate through this stuff. What else you got, brother?
How do you feel about heroes that come to work sick?
I think
their jobs are so important.
Yeah,
just work from home.
And but then it takes the elite like yourself out of the mix, right?
You know what?
And it's a different look. It is a different world we're in now, right?
Back in the
day, it was never. I don't miss work. I don't take any sick days. Now, dude, especially in your environment where it's tons of people in a small area, all sharing the same air.
Yeah.
Come on, man. What are we doing? Like me, I'll just shut my door and be like, stay out of here.
Yeah.
Like, but I don't have to walk by a bunch of people. You do. I don't need to be. You don't need to be bringing in that. We don't need uh, the A in DNA out.
Yeah. Then it's
Otherwise,
just
you'd be
D.
missing this kind of great.
Then it's just the big D.
Yeah, yeah. We don't need that, man. They get enough of Big D with Mortgage Gumbo.
Mortgage Gumbo on Saturdays, right?
That's why I love breaking it up. Yeah, man.
Saturday, what time?
9 a.m., man. 9 a.m. and
Central
then a
time.
re-air
Central time,
or
right?
a simulcast at 1 a.m. Sorry, 1 p.m. Central. Yeah.
Yeah.
So absolutely, man. So I know your schedule keeps you pretty tight on the weekends, but need to get you on that one day soon, man.
You might get a random secret caller come.
Yeah, hey, you tried to trick me up years ago. I remember calling to ask about energy efficient mortgages, man.
Yeah.
That was good stuff,
Yeah.
So, but
You handle that like a pro.
Like a pro, brother. All right, Mortgage DNA. Hey, he's Andrew Makovic. Go find him. Google him. Best looking loan officers he could be found under. Best looking national loan officers.
Well, I know it's the largest head, probably.
No,
sure,
man.
Your
sure. Camera does a good job.
I can't even get
Right, then we can't hear you. You're too far away from the mic, man. Too far away. So go follow him. He's awesome. Follow him on TikTok, Gumbo Nation. Telling you, go check this guy out. Go follow him on all his social media sites. And then, hey, we'll see you this Saturday, 9 a.m. We'll be talking homeowners insurance. The queen of insurance, Colette Biedenkopf, is going to be in. So you want to know what's going on with insurance? She's got the latest updates. And, for all those folks who think, oh, it's just going to go down, we'll talk about and give you the answers on that and what to expect going forward. So, Mortgage DNA Nation, we appreciate you. And we'll see you next week. We are bugging out.